Hello, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 5th of December, and we have Brent crude oil trading below $80 a barrel, closer to $78 a barrel this morning. This was big news overnight, a big interview yesterday with the Saudi energy minister with Bloomberg, which was itself early news because of course, Bloomberg and Reuters, and amongst others, were barred from accessing the OPEC meetings in recent times, I think for most of the last 6 or 8 months. And so that in itself seemed early news that OPEC Plus had relented to allow those news organizations back at the table and indeed gave them the big interview. Let's welcome this morning Ahmed Mehdi, Managing Director, Renaissance Energy Advisors and Visiting Fellow, the Oxford Institute for Energy Studies. I would suspect he's probably been to about 100 OPEC meetings. Ahmed, your thoughts on the interview with the Saudi energy minister overnight, if indeed there was significant news there. Clearly, he feels they've done enough to tighten up the market in the first quarter, which ultimately seems to be their goal. Your thoughts on the decision last week and the minister's interview yesterday?
Thanks, Sean. Good morning. Yeah, I think that there was a view that perhaps the OPEC meeting was what was priced in, was a rollover of the voluntary cut from Saudi. Perhaps what was more of a mixed message was the ascription of the invitation for other members, the extra 900 KBD, that would be on a voluntary basis. And I think that the news and the reaction in terms of the messaging perhaps was a little bit more mixed, particularly given the fact that the market will be watching for the compliance to that extra volume, in particular since it comes from countries where there has been a weakening of that compliance, particularly if you look at Iraq, Russia, and also to a lesser extent, there is a question mark around the UAE as well. But I think fundamentally, you still have a significant cut on the books, which will help to address the concerns around the stock build in the first quarter. And naturally, the Saudi oil minister, in talking about the potential for an extension beyond Q1, was to allay those anxieties. However, I think that this is also taking place against a backdrop of what's happening in the managed money market, so futures positioning, question marks also in the macro side of things in terms of perhaps markets getting ahead of themselves in terms of pricing in rate cuts. So the Fed is still a central actor in terms of where oil price direction is moving. But fundamentally, as I mentioned, the signaling was perhaps not the best of outcomes for OPEC. And
says the diplomatic consultant who works in the Middle East. Noor Aslan Ahmed, editor of Crude Oil Argus Media. Your thoughts on the decision last week and the interview with the Saudi energy minister yesterday? He went through a lot of the detail in trying to explain or trying to give, I suppose, credibility to the Russian cut, and they met with all of the shipping agents, and everybody was in the room, and they did it 3 times. And I mean, it was very detailed in explaining, particularly Russia's the robustness, at least as he would like to see it. We should all be convinced that Russia is seriously participating. Your thoughts on the meeting last week? It wasn't a meeting, it was an announcement. The meeting was 2 weeks before, or over 2 weeks, trying to come to a decision, which they finally did. Your thoughts on all of those pieces of the puzzle and what they mean to us now?
Okay, so on the Russian bit, right? I think that Russia, based on our tracking, Russia has actually reduced its exports. I think with Russia, the uncertainty or the concern is that initially, if you remember, they said that they were going to cut production. And then after that, later, they said they were going to cut exports. And after that, they said they were going to cut oil exports and not specifically crude exports. So I think that flip-flop, if you can say, is the thing that is probably causing some concern in the market of Russia's commitment to this output cuts. Because how do you measure if it's just oil exports? How much of it is crude? And they've banned, or they've already banned some of the products exports. So I think that is the main thing when it comes to Russia that is a bit uncertain, because it's hard to measure, and you will only see it in retrospective, right? But I think that there has been reductions in the Russian crude exports, may not have been as much as 500,000 barrels as they initially pledged. In terms of the whole OPEC plus cuts, we see the amount, which total is about 2.2 million barrels, including the pledge by Russia and Saudi Arabia, is substantial. And I think that it's just a fact, as Ahmed said, that it was voluntary cuts and each country announcing its own. That was just a little bit of it spooked the market a little bit, because they didn't feel that there was this cohesion or this alliance by an OPEC plus, right? And that created.
I suppose it was kind of the king has no clothes moment when the minister said, "Well, these are all voluntary cuts anyway. There's nothing compulsory about this OPEC plus that has been existing for 6 years now and propping up the whole market. But actually, they're just voluntary, and it's kind of." That's the first thing that struck me. Oh, wow! There's no real commitment here.
But you have to also remember that in April, it was voluntary cuts as well, and they delivered. Right?
Well, these have been. The point ultimately is that OPEC plus, everything about it is voluntary, because there's nothing treaty about it. They're not members of OPEC. There's no policeman coming to knock on your door if you don't pay your parking ticket. All of the weakness element of this arrangement, I suppose, become exposed at times like this, and perhaps that's why the market isn't responding.
Yeah. But we do think that, from our view, from our consulting view, we're very positive that it will be delivered. And our view is that if they hadn't announced this cuts in the first quarter, we would have seen. Our view is that a surplus of about 850,000 barrels per day. Okay, if these cuts are delivered as promised, then we would the surplus would be gone. Yeah. The only thing, the caveat is that from our consultants' view is that the cuts cannot stop in the first quarter. Yeah. That if it's okay.
Well, and I suppose you have to see really where the credibility of the cuts are, because of course Saudi Arabia doesn't want to keep continuing on a road in which they're rowing both sides of the boat. Let's welcome Mehmet Agucu, Group CEO, Global Resources Partnership Chairman, London Energy Club. Mehmet, there's much things to look at today, and I wanted to get your thoughts on the other news, which may not have immediate impact for the markets, but certainly could have, and that is the growing noise around the lack of funding, or perhaps the collapse of funding from Washington to Kiev to sustain its war footing in the war against Russia. Your thoughts on the developments there? It's something the Republicans have brought with them into their House majority. Now it seems to be consolidating as the Biden administration struggles to get new funding. Your thoughts on that, its relevance, and what it means, how it's going to follow through? Mehmet? Do we have Mehmet? I cannot hear him. No. Okay. I'll move back to Ahmed. Ahmed, your thoughts on that point. Ultimately, the Saudi minister was very confident, and it was sort of amongst the sort of different headlines that one might have taken away from the interview, was that he was confident that this cut announced last week would override the stock build, the seasonal stock build in the first quarter, just mentioned there by Noor. Your thoughts on that?
Yeah, so as I said, just one more point I was going to mention from the previous, which is connected to this. I think what will be interesting to watch this week. I'm not sure if it's out. Maybe Noor can, sorry if Aslin could mention disclose that, but I think seeing what the Aramco OSPs will be this week will be interesting as well. I think that the market expectation is maybe 90 cents to $1 increase, reduction. But if there is any change to that, that could also feed into flat price direction as well. So I think that's one indicator to watch. I think the bigger issue in terms of your question is also the call on OPEC Plus throughout next year. And there's been some revision to non-OPEC supply. But naturally, there's always seasonal weakness in the first quarter. And that's why perhaps there's, it's not terrible for OPEC Plus, because at the end of the day, this is, the Saudis continuing to support the market, but the invitation for the voluntary, I think the way I would read this is that the Saudi are holding that 1 million voluntary cut in their back pocket, and effectively that should be an inducement to other producers to say, look.
I mean, it did feel like the underlying comment, the sort of undertone of his commentary at the interview at OPEC or with Bloomberg was, we're not going to carry this bucket by ourselves anymore. And I think that was kind of the punctuated point.
You're right. So the burden sharing. Also, if you think about it, for some players like the UAE, they were given in any case I think it's around about 200 KBD increase as part of that reference production level revision from the last meeting earlier this year. So this is more of a sort of a temporary issue. The issue is, I think, to a certain extent, is that there's two ways of looking at this. On the one hand, the speculators in the market perhaps sometimes may read OPEC cuts as a sign of weakness in terms, and on the other hand, there is this issue of compliance. And I think it's been lurking in the background the last few months, and effectively the reaction of the market is, we'll see it when we believe it. We'll believe it when we see it. So to a certain extent, I think that's perhaps where we're going to have to just wait a bit longer for that price reaction. Also, December time, people are closing their books. So to a certain extent, there's a little bit of a drop in the open interest. So to a certain extent, it's not doom and gloom for OPEC, but certainly, I think my view was that the messaging could have been perhaps more crystallized. There was no press conference.
Well, perhaps that's why they opened the doors again to the big news agencies.
Maybe, could be.
That some real. I mean, that was one of the questions that the reporter asked, which I thought was a sensible enough question to ask, given trying to identify. But I would suspect, all in all, that if they got through the winter with an average on Brent of $78 to $80 a barrel, they'd probably be pretty happy. I would think. I doubt that that would be that wouldn't be a bad price. Noor, Aslin, of course, much of this depends on the forever where is China going, and the China tea leaves, if you like. Sitting in Singapore with a front row seat to the performance of the Chinese economy every week, it seems to be sort of one step forward, two steps back. As we move into the new year, and obviously the new year, the Chinese New Year holiday, which typically is a demand surge window for the annual cycle, winter in China, surge in annual demand for energy. Your thoughts of where is China going into this new year 2024?
Yeah, that's a very good question. I mean, to be honest, I think recently in the last month, we've actually revised our demand forecast for China's growth a little bit higher. Right now, the Argus Consulting team has putting China's oil demand growth in 2024 at about 450 420 to 450,000 barrels per day. That's a bit higher than what we had roughly about a month ago, I think, when we were predicting a growth of about closer to 310,000 barrels per day. So it's a little bit higher. But it compares with this year, right? When growth is about 1.2 million barrels per day, although it's coming from the COVID downside. So I think that you're totally right. We do think that at the start of the year, there will be that surge of demand just before Chinese New Year, which was in February. At the same time, at this point, we do see that in terms of the crude runs in November, they did dip. And we think that in December, it's going to be a little bit under pressure. It'll still be a bit low. It can go up a little bit in January. But the record high crude runs that we saw, I think, around August, September, it's easing off. So there's still a bit of uncertainty. And, so that's a bit of a concern. But I think that there's going to be that seasonal jump in demand just before Chinese New Year. It's true.
Ahmed, looking at the slightly wider, we were here in Dubai at COP28, and one of the headlines that came out yesterday in all of the noise is that the US is now not only the world's largest oil producer, but it's the world's largest LNG producer and exporter, surpassing Qatar. And at the same token, they're claiming the mantle of being, all things energy transition and climate sensitive. But the point, putting aside the COP and climate narrative, but just the point that the US has expanded oil production so significantly this year with other Iran and elsewhere. Can OPEC chase this down with more cuts, or at some point do they have to just surrender and not give up market share? It's the perennial sort of fine line, but clearly this is another moment. We've seen this show before 10 years ago. They tried to chase it down, and shale just grew and grew and grew.
Yeah, it's a good point. I think just to connect the conversation with Aslin's point earlier, to a certain extent, it's a bit of a double normalization for next year on crude and products, right? So product cracks will probably ease because of new refining capacity. Likewise with crude, we're talking about China having, almost the post-COVID, sort of recovery having done its course, and now it's now it's really actually we're talking about the range of uncertainty next year on Chinese demand is perhaps less uncertain than it was perhaps for this year, where the range was a lot wider. Nevertheless, it depends upon your traditional S&D balance metrics. The demand for next year, the range, we're talking about perhaps between 1 to 1.5 million barrels a day of growth, but probably perhaps more on the lower side than rather than the higher side. When it comes to non-OPEC supply, I think what has been interesting has been the view of the US. I think in the beginning of the year we had I think there was a bit of the market was a bit surprised with the latest data coming from the US in terms of production growth, and that fed into market sentiment in this quarter.
And not only there, but of course the year in which we end, Iran has added close to 1 million of exports, and Guyana and Venezuela.
Yeah, I would say that with Iran, for example, it's more sensitive to the Chinese buying cycle rather than US policy. I think that certainly for the sources of non-OPEC supply growth next year, yes, for sure, we're talking about US, Guyana, Brazil. Regardless of the discussion around Brazil and OPEC, the invitation, I think that we're still talking about the sources of non-OPEC supply growth covering that that demand growth next year. So as Aslin said in the very beginning, and even before the OPEC meeting, the market was basically saying, look, the call on OPEC for next year is going to be, there's going to be more legwork that will have to be done by Saudi, and I think that what has been cobbled together will, continue to be a theme into the first quarter, and likely there will be the potential for cuts to be extended, which is probably what triggered Abdelaziz's comments in terms of allaying anxieties in the market that these will, continue if necessary. So certainly,
that's always
we're talking
the
about
case,
the
isn't
first.
it? I mean, that's the perennial. We can do more if. I mean, that's no new thing. I think the big question going into the new year now is the fragility of OPEC Plus. Ultimately, seems to be why obviously going into a weaker demand cycle. Let's go to the survey question and then come back and talk a little bit about geopolitics. The survey question this morning, looking at this point, the Saudi energy minister said OPEC plus oil supply cuts agreed last week should be enough to offset the increase in global oil inventories during Q1 2024. Agree or disagree with that view, that the OPEC plus cuts should be enough? I suppose a lot depends on whether you believe all those cuts will be implemented or not, and obviously he does, and with good reason, because they've proven themselves in the past. But will that indeed continue to be the case? Will this be enough to continue to achieve that? And at the same token, whether demand meets the answer, or whether demand doesn't continue to decline. I want to, Nur Aslan, to look at Mehmet. Unfortunately, his Wi-Fi has fallen this morning at just the wrong moment. But I wanted to get your thoughts on. I mean, we have a situation today. The markets are looking at. We've got what could be a war between Venezuela and Guyana. I mean, there's a historical land claim to literally half of Guyana, which most of the world wasn't even aware of, but apparently is deeply historical and passionately felt by all sides of the political spectrum of Venezuela, both the government and the opposition. So there's no crack in there between those two that the US or the others could sort of exploit. We've got the growing challenge. We've got Zelensky speaking to the House of Congress today, the senators trying to get them to convince them to release the next wave of money, and if without it, their ability to continue to fight the war in Russia and inevitably the ongoing tragedies of Israel's invasion of Gaza. None of these big, what you would consider for energy markets, big geopolitical uncertainties are having any impact on the oil market, as they call it, the geopolitical premium. Your thoughts on why is the market being a bit complacent here? Your thoughts on all of those different geopolitical fractures that the world is currently facing and their intersection with the oil markets going into the new year?
Yeah, I think that with Hamas, Israel, and with Ukraine, the one thing is that with Ukraine, I think that the market has really come to accept and dealt with it, and the market has settled down because and with Israel and Hamas, neither is producing. And I think that the fear right now that conflict would pull in other Middle East producers, that seems to have receded. And I think that's why the market is. Now, the Venezuela-Guyana, to me, is a concern, but because they're both producers. But I think, just from my point of view, I'm not a political expert, but my point of view is that Venezuela has just managed to get US sanctions at least temporarily lifted. And Guyana is trying to, continue to export. I mean, it is still a fairly new crude oil exporter. I'm not sure that either country, in terms of the revenues, would really want to jeopardize that. But okay, I'm talking purely from an economic point of view.
Yeah,
I'm not
of
sure.
Course.
Yes, anything can happen. But it's just
the
way I see it between Guyana and Venezuela. It's like, do you really want to jeopardize something that they are both trying to build in terms of their oil export?
I mean, ultimately, I think the oil markets are probably going, well, there's at least 5 million barrels of idle supply around. There would have to be some major disaster in these different theaters for there to be a consequence of significance for the oil markets going into the weaker window of the year and the first quarter. Ahmed, your thoughts on that, and just adding a layer that there's news today that the Russian President Putin is going to be visiting Saudi Arabia and the UAE in the coming days, which in itself is relatively big news, given that he's barely left Russia since the invasion of Ukraine. I think 1 or 2 trips to China, but coming to Saudi and the UAE at this moment, when all of these different sort of geopolitical issues are in play. What's your reading of that?
Yeah, that's a good question. I mean, I would say that naturally, as you know, Sean, I mean, you know, being in Dubai, you know, since the Ukraine invasion, Dubai has become, or the UAE at least, has become an important part of the Russian oil supply chain. Not just crude, actually, for products as well, in terms of re-exports as well. Geopolitically, I mean, you know, despite all of those discussion points we've had previously about the optic challenge for OPEC, you know, Saudi needs Russia, Russia needs Saudi. That's the long-term view of you know, despite all of the knee-jerk headlines around any fray in their relationship. You know, that's the fundamentally for the long term. They need each other as part of that, not only for geopolitical purposes but also for market positioning purposes, particularly over the, you know, over the long term. In terms of the geopolitical backdrop, there's also, I suppose, the issue of, in terms of how the Middle East has always been dealing as well with the you know, the loss of a kind, you know, basically the development of a sort of vacuum, and how there's been geopolitical rivalry in the region, particularly around Russia trying to assert itself in the region, and how the Ukraine conflict has changed or not changed that. And I think that that's certainly, you know, for Russia, the Middle East is a key strategic area, and that's being reflected as well in the changing dynamics on the ground in key places, whether that's Syria, Iraq, and increasingly now with the Israel conflict. Whilst it hasn't impacted the market, I think also with you know, Iran, as Lee mentioned, you know, the question is, what is the motivation to create a larger geopolitical crisis from these actors? And I think that that's a point that's also being reflected in terms of the market management as well from OPEC. You know, there's been a lot of headlines. I think I was a bit surprised to read a lot of headlines about OPEC decision making be influenced by the conflict, and I think that's just not true. You know, I think that there's certainly you know, one has to separate the oil file from the politics file.
Yeah, I mean, there's so many layers to, I mean, to the shepherding of 23 countries in OPEC plus, that the sort of maneuvering of adding another layer of geopolitics in terms of playing the card this way or that way would seem to be, I mean, if indeed a luxury they just don't have, they're more concerned about, you know, what can you drill out of that field. I thought it was quite interesting. I mean, the different things the minister said, and one has to probably listen to that interview a few times. He noted at one point, he said, oh yeah, I think it was talking about Angola or one of the African countries, that their cut was, you know, not 1.06, it was 1.061 or something. You know, his awareness of the minutia of like 10,000 plus or minus barrels seemed to be quite, you know, not informative in the detail, but also indicative of the scale of coordinating everybody to be participating. And I think that's the big question I take away from this week. Yes, the Africans took the headlines from the preempt of why they weren't reaching an agreement, and the meeting was delayed because the Africans didn't want to give up their quotas that they weren't producing. But on hearing his interview yesterday, it sounded to me like it was much more Russia. It was much more about Russia proving that they are participating in this cut, that they will participate going forward, that their credibility was reviewed and will be continued to be reviewed in order for it to be trusted. I think that was, to me, much more enlightening.
I think the seesawing that we talked about earlier between production, crude production, and then obviously we moved to exports, and then now it's products as well. So I think that inviting tanker tracking companies to monitor that and then submit and then effectively submit some kind of record, I think this just gets a little bit more messy. So I think that that's already being factored in by the market, that there is a challenge around what is it that we are monitoring with regards to Russia. But I think the issue here, which perhaps the market will have their eye closer on, is the voluntary compliance of the players that perhaps I think the numbers here, Iraq, 220, UAE 160, these are the ones that I think will be important. But as I mentioned, for this week, it'll be interesting to see, or in the following weeks. Also, as Aslan knows very well, all of these markets in Asia, they all trade very forward. So, speaking to the players, the equity players who receive cargoes, whether or not they've been cut or not, these are going to be the clues as to where we see actually real action. And fundamentally, we're not dealing with a crisis here. We're just talking about why did the market not react? And I think that's pretty clear.
Well, the market is in a weak window, and certainly the reaction could come over time. I think, as I said earlier, if 100% agreement, whenever you get that, you've asked the wrong question. We'll have to go back to the drawing board. The idea that the outcome for next year, I suppose, is uncertain, like so many aspects of it. Has the Fed done? Are we looking at recession? Is China going to get worse, or is it bottomed out? I don't think there's ever been an end of a year or the start of a new year with so many substantial questions nearly could go in either direction. And one of them, of course, the terrible tragedies in Palestine, they could still, given what the Israeli army is showing and continues to show in Gaza, that cannot be ruled out, that when you displace 2 million people, what clearly looks like a clearance strategy, that will not spread, and one cannot depend on that either. So still a lot of unknowns to work out before the end of the year, enough to chew on over Turkey. But thank you, Ahmed, as always. Really great to have your insights. If I don't see you, happy holidays, so to speak. Nur Aslan as well, editor from Crude Oil Argus Media. Thank you so much for your time and insights this morning. And Mehmet, best of luck with your Wi-Fi. We look forward to getting you back on soon again. All the best, guys. Take care.
Thank you.
Thank you.
Bye.